Okay, now we're going to recap the pound at the March 12th, 2010 end of the week review. Let's take a look at this. What happened this week? Well, it was pretty gloom and doom on the pound until the last day of the week. We lost 11 pips, nothing, lost 19 pips. Then we finally got a 168 pip gain at the end of the week, finishing out with 138 total for the pound. Let's take a look at this. We started out the week kind of working a channel here is basically what this. We took in a short and then we also took in a long, looking to catch the tops and the bottoms, which we caught the bottom, but it just didn't pay off. Let's take a look at the reason what we did right and what we did wrong here. We were extended in our potential stops and limits on both sides. We're entering consolidation. It's the second day of the new supposedly possible long trend, but we're getting the consolidation signal as well with the takeover attempt. We've got low RSIs with high directional range strength. We're long to the top with an engulfing candle. It's just showing complete consolidation. It's the day after the squeeze, which went to the upside, so we're looking for it to come to the downside. So that's the reason why we took the short at 152.06. And the reason why we didn't do a double dare, which we really could have done, the transition was nearby. It was because the 206 was just too close of a barrier for that, and we figured, okay, if it does it, it's going to come up and touch it, which it almost did. We were 10 pips away and missed it. But we also made the move to go long because we were in a long trend, a new long trend. We took the middle of the three-layer support at 150.65, which coincided fairly well with the bottom of the channel at 150.73. We did a little gap up slightly from 38 to 52 on that day. Anyway, we wound up losing 11 pips, and then we went into a cycle of nothings, and we lost 11 pips on this day. Let me show you. Nothing, and then we lost 19 pips shorting at 150.51. Well, we went short at 150.51 for what reason? Let's take a look. Why would we have shorted this? Well, it's a new move to the short side after transitioning, as you can see there. We also have a topping action. The squeezing motions are over, which would have been up, down. Then that's a flip of the script, which makes it down. We would have tried up. And then here, we don't really have any signals to speak of. So we simply follow what it says here, a new short move. Okay, and so we did, and we took that short, and 150.51 did not pay off. As you can see, it was a small loss. Then Friday comes along, and we're looking at the move that came to the upside. We also see that we're switching out from one trend to another. We've got strong motion towards the upside with the RSI. It's a narrow range. It's transitioning out of this short, saying no, we're not going to do that. Plus it's the fact that it's Friday, so profit taking from this may be going on. So we expected to see this thing come to the upside, as opposed to where we were. In other words, we were shorting it. Now let's reverse and come long, which is a little out of character. Normally, if we have a day of moving up, we want to see it come back down. However, what we are in here is the transitional state. This is what's important. You have to see when you have a transitional state and you've got the topping or the bottoming action, especially LTs and SPs, but the double tops at the same 2 days in a row is sufficient. And with the transition, especially in consolidation, and you cannot get the close further away from the high or the low by more than 10 pips, it's probably a situation where you want to see continuation. Okay, especially when you see the signal moving from one direction to the other with the transitional signal. Okay, we didn't get any other, and plus it's a narrow range, so if we pop that top of 50.69, good chance to see this thing push. Okay, which it did. And fortunately for us, we did do the buy stop over the 5069, but we also looked for it to come back and make a move and come forward, which it did. We went long at 150.33 because we included the spread plus one, got 160 pips, 68 pips out of it. So it turned out to be a good deal by the end of the week. It just goes to show you, just because you're having some trouble throughout the week doesn't mean it's the end. It's never the end until the end. An inexperienced trader would have looked at this, oh, I lost 11 pips, oh, I couldn't get filled, oh, I couldn't get filled, oh, I lost 19 pips. They may have become very discouraged at this point and not even have traded, and would have lost the opportunity to earn 168 pips. So, you got to have the consistency. That's the lesson to learn out of this pound for the week. Consistency and being there and just not being emotional about it. That's the key. All right, let's move on. We're going to take a look at the Kiwi